Hello and welcome to the look ahead for Tuesday, the 17th of September with me, Fiona Cincotta, Senior Market Analyst at City Index. So looking ahead in the European session, we'll be watching out for German ZEW economic sentiment. In the US session, Canadian inflation data will be in focus, as well as US retail sales and industrial output. So let's just start with what's going on in Germany. The economic sentiment is expected to deteriorate further, falling to 17.1, down from 19.2. Now, this comes after the ECB downwardly revised growth forecasts last week at the meeting, where they also cut interest rates by 25 basis points. So this we've got here is the euro-US dollar chart that we were looking at. Interestingly, we've seen it rebound from the 110 level. Now, this is in part due to US dollar weakness ahead of the Federal Reserve interest rate decision on Wednesday. Markets really upped the ante for a 50 basis point rate cut to 63%. Well up from around sort of lows around 20% at some point last week. So that sort of reassessing of the likelihood of an outsized rate cut by the Fed has pulled the US dollar lower, benefiting euro-US dollar, charged higher, rebounding off that 110 level that we'd highlighted. And it's just testing now this level here, which is the 111.40. That was the high that we saw back in December 2023. Now, it's looking like a fairly encouraging move on that handle. If we do get a break above here, then that does bring the 112 level into focus. Obviously, as I mentioned, we also have US retail sales data due tomorrow, which are expected to rise 0.1% after rising 1% in the previous month. Just whilst we're talking about what's going on though in Europe, let's just take a look at the DAX as well. So ahead of that data, although the outlook as far as growth is concerned is deteriorating very much within Germany and within the broader Eurozone region, which was highlighted by the ECB, we're still seeing a recovery in the DAX. DAX found support earlier late last week at the just below 18,300, so 18,250. We've rebounded higher. The market is going to be looking for a move above this level here, which is the 18,930, in order to test all-time highs. Obviously, we've got that sort of sense of falling interest rates, which is beneficial for the stocks, particularly the sense that the Federal Reserve is going to start cutting interest rates is also beneficial. However, could there be concerns that the Fed might spook the markets with a larger than expected rate cut? Maybe that would give the wrong message that perhaps the Fed is behind the curve. So we may see stocks struggle, and we might see a more sort of cautious approach over the coming days. Then just finally, we've also got USD Canadian dollar, which is trading here. We've got the inflation data from Canada, which is expected to increase 0.1% month on month after increasing 0.3% in the previous month. Now, the Canadian dollar is struggling against a weaker US dollar, and that's because over the weekend we also had comments from Bank of Canada Governor McClellan, who basically said that the Bank of Canada might need to increase the size of their rate cuts if growth fails to materialize in the Canadian economy. So obviously that's been put some pressure on the loonie. The US dollar is also under pressure, which means this pair is not really moving anywhere fast right now. It's testing resistance there at the 136 level, which is the 200 SMA, as well as this level, which really offered support on several occasions across this year, really. So buyers going to be looking for a move above there. If we get weaker than expected Canadian inflation data tomorrow, that might help that move higher. Above there, that brings the 50 SMA at 136.60 into focus ahead of 137. We got stronger than expected inflation, potentially unlikely, but then that could encourage a move back towards the 135 level and down towards the August low, of 134.40. So I hope you liked what you've seen, and if you do, then please do give this video a like. And if you would like to receive more videos like this, then please do subscribe.